Hey guys, short follow-up from the Ripple YouTube. A couple of folks not liking that I was bearish on their favorite coin. That's functionally and fundamentally the better coin. I don't know. So here's the thing. You can't be two things at once. You're either pregnant or you're not pregnant. You can't be half pregnant. So you're either technically analyzing a chart for whether it's about to go up or down on a price behavior basis, or you're discussing the fundamental merits of the various different tokens and how fast they are, how quick they are, in some cases how private they are, etc., etc., and why they're great projects. Great projects will pop when they're ready to pop, when the money starts flowing in and makes them pop. Timing, no one can be right about that. Fundamentally, people have been buying gold for the last 7 years in a bear market. I've been investing in gold on the low side and I've been shorting it because the price behavior says we weren't ready to go up until it crossed that 1350 line, and that was the end of the bear for me, and that was a bull. So now I'm trading it long and investing on it long. That's the difference between technical analysis and fundamental analysis. Fundamental analysis is if you have all the facts one day at some point, at some time that you cannot disclose and have no knowledge thereof, you will probably make some money. Technical analysis is about being a lot more precise and understanding when that time may be. And trading, you have to be right because you're using leverage. And when you're wrong, you lose. And if you're heavily leveraged, you lose a lot, hence money management. So we're price behavior specialists because we want to know also when, not just if. So this may well be a great project. And as I've said before, not suitably fundamentally qualified to comment. I know a reasonable amount, but I think to comment you need to know a whole bunch. I like listening to real experts on that, and I'm certainly not one. However, what I do is price behavior. So what did we get on the price behavior side? Well, here we go. Let's do a quick re-summary of this. Some of this I captured in the first take, but I'm going to do a re-summary of this as a part 2 to the first video. So, up, you were going up. You got what we call an imperfect HVF, that little high over there. I'm in grey, I'll change it out of grey. Let's make it pretty in pink. You got a slightly higher high there, but generally this was an HVF structure that led to a breakout. You got a funnel that's set up there, which incidentally coincided very nicely with the 0.27 level that I've highlighted in blue there for you on the side. Took all my drawings away with one foul swoop. What can we do? Can we do undo? Yes, we can. Whew, that was close. I literally wet the bed and the pants and everything else. Okay, so that was the first part. That was part of the upside move. You were in what we refer to as a hunt volatility funnel trumpet, which is a broadening pattern, which means at some point you will fail. And you were bumped into the top here. Nice shooting star up top here. Let's just show again where we're pointing. Let me use a different color. Go with the orange. Shooting star over there. Also bumping into the top edge. You could see bumpity bump of your trumpet and getting a little bit of resistance. Also what I'm highlighting is rising wedges. You had two of them. This was a grind line coming up underneath there. You can learn more about all of these aspects if you want to learn how to do this for yourself. But you actually had a rising wedge. Or be in a community of people doing this so that you don't miss trades in the future. In short, the question I'm asking is which of the shorts you took. If you didn't take any, there was an opportunity that went bearing. There was the other rising wedge. That came later after you first bounced on our 27 neckline and also our orange axis line, which we ended up taking as the neckline that we used for, but they convalesced. They were very close together, the little orange dotted and our round number of 27. But we took the slightly more conservative draw, which gives us a target just before the low, the stop line of a legacy upside HVF that led to the bull market in Ripple. So let's take some of these scribbles off without taking off all the sexy annotations. So that was your wedges that we were discussing. There were two of them. This bumped along the top of, whoops, deleted the blue, the top end of the trumpet, the hunt volatility broadening structure trumpet. You could have had a stop at the top of this head. So we're talking about a head here. That's left shoulder. That's a right shoulder here. All part of a flag, by the way. You can see the flag over there. That gave you your third entry, the break of the flag. It was still before your blue neckline and was just at your orange neckline. You also had a fourth late entry, which came on the break of the low end of the trumpet. Anyway, so rising wedges too. You could have got short at the break of the rising wedge there. You were also bumping into a historical grind line. This bugger that comes from way back when. It's got a mild incline on it. It was a period of sustained support for Ripple that it then broke through. And this is in essence a big return move. Covered this in part 1. So I won't go into it too much. But this also made up part of a return move. And this is all part of the Bitcoin being bullish and the alt rally that formed this trumpet, that it bumped into this line and could do no more. Lots of selling wicks, squeezing into the wedge and rolling over. Stop at the top, enter on the break, all the way down to a target. How about that for a risk and reward? Very nice. Blow off moment and a slap back down all the way down. That is an exhaustive move. That is like a candle such as that, a shooting star. If you merged and aggregated this price action all over here, you would have the upside here and you would have the right shoulders here, but this would actually all be a shooting star. It's an exhaustive point, and the wick ended up here at the top of the trumpet and on the grind line. That's what I'm illustrating to you there. This is why I say trading works. The more patterns you understand, the more you know, the more you get information out of the chart. So stop for your second entry could have been there with the sell on the second wedge over there. This could have been a slightly high right shoulder, and then we took the flag as a right shoulder as it dipped deep enough and properly ran the orange level, but that actually could have counted. It was narrower, even though it went higher, it was narrower than the long standing. You got onto the orange line over there and you broke away from it over there. You can see you have a wider and you have a narrower one. This shows higher volatility, more chilled. When you get more volatile, you're getting more bearish. You want to see a head and shoulders gravitate into more bearishness. The only thing I've really not done is I've not thrown volume on here. We can do it, but we had so much information it would have been overload. The final confirmation is the breaking of the trumpet low. You could have had that third entry just at the top of the rollover candle. Let's take them all off. Ready to lose all the annotations. Yep, you could have had a stop there. And you could have traded the break there and gone for the target. All of these are extremely high reward to tight risk trades. Are you getting high risk to reward trades? Well, you had 3 entries. The very first of which is absolute beaut up top there, that would have been your risk. That, ladies and gentlemen, is your reward, of which 80% has probably been earned. To be clear, nothing has been achieved yet. There's no room for gloating here. We've had progress, yes, but it needs to run the target. Otherwise, you need to close now if you never intended that. We're holding for the target, so we'll see what comes. But you did just run a key level. That was the axis of the same funnel from the history. That was the green for go in the bull market. That was the axis, and that was the stop for that legacy funnel. And I'm saying you're going to run the stop for a second time. You've broken it, which means implied bearishness. And that target is pointing to it. It's a slightly more conservative target at the axis than it is on the blue line. I'm good with that, given the 2 options. All of these are high R trades. High R trades. How many high R trades are you manufacturing? Risk, reward. These 2 are pretty similar. Well, that is the one. That's the one I'm missing. Hold on. They're pretty similar. They're identical, Francis. You're drawing the same thing twice. Oh, there you go. Have another coffee, beer, fill in the missing toxification poison of choice. So yeah, we don't need that one, thank you. So you have 3 different trades, 3 different RRs, but all are expansive. If it makes what it's supposed to make, which as yet it hasn't done. However, on top of all of this, we also said Bitcoin needs to be weak and would be weak to support our short of alts. So let's talk about Bitcoin again, because I didn't in the last one. And I felt afterwards, I should have mentioned that. I should have mentioned this. Oh, I'm kind of funny that way. I think of all sorts of things that I could have mentioned. So this was Bitcoin. I've shared this on the Twitter. Are you following at the Market Sniper, at the Crypto Sniper? I don't know. Maybe not. Maybe you think it's not worth your while. If you want to, you can. And it's free. So what you would have seen yesterday or a day or so ago was the following Bitcoin. Where is he? Oh, let's just stay with this one. The fact that we were calling for weakness here, calling a shooting star, scribble again, shooting star here, that is weakness, that we'd warned before, 2 shooting stars when we called short here. No one believed us. They didn't believe us. You're a liar, they said. No, they didn't say that. In fact, many did. So yeah, shooting star and 2 of them there with a big rejection. And we warned about the rejection here on high volatility. It was also a huge bear event. Then you had very high volume by price. This was a key fall point that we rounded bottom out of and broke with momentum, and that we supported on here, which is why I'm suggesting the probability is the relative low 3 will come higher than the 6.2, 6.3 lows that was over here. So this was our primary and most optimistic scenario cast, is that the new relative low 3 will come somewhere around here in this green box. There you go, fill in the missing word. But that, given that you have the shooting star, there is downward momentum. That's what that arrow is showing you, and there. It means it is going to sell off. That means you needed to get out of your Bitcoin, but you can buy a whole bunch more Bitcoin here. All the guys that say last chance for 10K, they're still lying to you. They don't know they're lying to you. They're good people. They don't want to be liars. They just don't understand technical analysis the way other people do. They mean well. They want you to be in for this pump, but you can be more efficient than their suggestions. So better to be alert. So look to buy your Bitcoin back here and hope that this scenario cast is good. If it runs that low, get out again. That means you'll eat some red. Doesn't matter. Because if it runs that low, it's doing a whole different ball game. But broadly, I think it won't. So we'll channel down and down here, and then we'll muck around with maybe a little bit perky on the upsides, but generally low volatility, in funnel boredom. You might get spinning tops, lots of spinning tops. They look like that. That's those dojis, and the spinning tops have small bodies. You might get a little bit of a shooting star followed by a hammer. We call those kettle drumsticks. There's no such phrase for it. We made that one up. Yep. There's too much that we need to do that isn't covered in technical analysis. We are technical analysis innovators. And these are common in funneling situations. And they're not shooting stars and hammers, even though they look like them. They're in a unique area. This is a shooting star because it's at a relative high. Just like that is a hammer at a relative low. And over there, as you can probably see. This was not a shooting star. It's not at a relative high. It is a shooting star-like structure that is in a low volatility event. And that is also a funnel event that will happen in here. And that's why you got an inverted H3F and you broke down there. That's too much for you to handle. I know. I'm over-pitching, over-teaching, but some of you will learn something, and I get happy for you for that. So we're expecting a little bit of a drift off, and then tightening in this funnel area. Where do we expect a low? I think somewhere between the 8 and the 7 is my best bet. That would be round about it. Could be a little bit higher than the 8, could be a little bit lower than the 7, but they're around. So from 6.8 to 8.2, maybe 7.3 to, kind of 8.3 roughly. So yeah, 7,000's a strong one. It's a strong one. It could come all the way and test. It starts to get heavy on the volume by price. That's the volume histograms like this when you start to approach this area. And that's why I think it'll be sticky going, and that you might get your support there. Just like you supported there, only it'll come in a little earlier. So that was your Bitcoin. That was your Bitcoin warning that you may go down. This shooting star and how it had performed previously. Remember, we called short here when everyone else was saying no. This was an inverted structure. You got a key level out of that. That we said 10.5 would be interesting level. 10.5 it was. It just made the 10.5 to invalidate that legacy inverted structure that ran so beautifully and had a 6-8 target that got you out on the wicks. Yeah, that's some history. We haven't done all bad. We don't get everything right though, and we've got to stay humble as well, and remember all the things we get wrong, which are plenty. So yeah, that is your update video on both Bitcoin, and the good news is here. So for all of those that call me such a perpetual pessimist, look at that. Aren't I just selling you the moon? I ran out of space personally. I don't think it'll be like that, but it's the long-term effect. We'll see you pass through there if we are accurate on balance of probabilities. Many people go, and I get this all the time, but you don't understand the halvening. He doesn't get fundamentals. I absolutely understand that there's a halving coming. In fact, it's been known for an extended period, my beautiful people. And in fact, all the information that is already known is well baked into the price. For all you know, the prospect of the halvening was part and parcel of what drove that bull move. It could have still been part behind that bull move, but at some point, more people were prepared to unload and showed that in the price behavior by unloading, halvening or not. So you've got to look at the price behavior. The price represents the best reflection of the smartest money minds, the aggregated voting machine that is a price discovery system market, and the participants all generally to a T know that in fact the amount of Bitcoin that will be mined successfully and per block will be half what it was coming May, and that is a known fact, and that is how the market has chosen to react on it. I've traded non-farms when terrible data has come out for the dollar and it's pumped. In other words, it wanted to go up anyway, it's decided to go up, it just needs the data point out the way, and you go but bad non-farm but market up, or but good non-farm and market down. The market is going to do what it's going to do. It's the best known system we have for price discovery, and it has all that information baked in. It's probably why this is a bullish setup and why it will run. And this will probably be a fiat-based event that could even be the Asian FX crisis that I've been suggesting. We do 360-degree analysis across all other markets as well, and we don't think crypto is entirely a bubble. It's run by the same people that are doing dumb stuff in the real-world markets like FX and equities. In other words, when money runs out of one, they can find their way into crypto, and it relies on people to do that. And the institutions and other types of trusts, family office, are getting more involved over the long time, and the next time we're going to move, we think that some of that money will be in there. Unfortunately, we think a lot of the original retail guys have had their BTC taken away from them because they've traded in this market, and they've traded emotionally, reactively, in a FOMO fashion, responding to the 9 fears that we all have within us, because they lack a method, they lack a process, they lack a community who can give them good guidance on good, solid technical analysis. They won't ask fundamental questions when we're actually doing a technical assessment, which already includes all the best fundamental information as voted for by the people with the biggest money, often the smartest, most best informed people, who happen to know that there is a halvening. Okay, hopefully we killed that one, but probably not. I'm sure someone will go, but the halvening, or but some other fundamental fact. Until I speak to you again, pop on down, book a chat and a call. You could have been making money on that Ripple short. By the way, we were short Ethereum too, doing equally well. The high betas are falling faster and harder than Bitcoin, therefore it is good to be short them, and those two are fairly liquid. In fact, the Bitcoin forks fallen even a little quicker, so we could have done marginally better there. Let's actually check that out and show you that we didn't get it perfectly accurate, although it's always possible to change. The Bitcoin forks on your coin market cap are down more. Wait for it to load, the hamster's running. Okay, Bitcoin Cash 11.85, Bitcoin SV 12.56. You could have been 12.56 down. Instead, we're only 9.85 and 9.52 down. So, you know, there's always space to be better. Whoops, it's changed slightly. We're 11.61 and 10.36, but we could have been 15. So actually we've done almost as well as Bitcoin Cash now. SV is not that liquid. Litecoin is probably would have been slightly the better one. and EOS is at 14. Binance Coin only 10, so we've done equally well. We're getting 11.61 and 10.36. We're not done too bad. I'm not sure about shorting SV. It's a little bit sketchier coin, both to the long side and the downside in terms of liquidity. So I think maybe Litecoin would have been the best trade. I could have chosen any of a few. I chose liquidity and the ones that gave me patterns and charts that I liked. Okay, I'm Francis. I'm the Crypto Sniper. Grab the mini series and all the free stuff below. Go and do it. Go and do it. Grab the Scandinavian Capital Markets, man. You trade the gold, the silver, the FX, euro against gold, euro against silver. They're all on there. Grab all the free stuff below in the links. Do yourself a favor. There's some amazing trades out of there. We are kicking ass in so many different areas. It's amazing. Sometimes you get purple patches. We recognize it. We stay humble because the market will break you if you get arrogant. That is a fact. Okay, see you all later. Enjoy. Bye for now.